Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and my guest today is Parikshit Chitalkar, co-founder of StashFin. We are going to be talking about digital lending. We are going to be talking about lending apps. We are going to be talking about lending in general and why lending apps have just exploded. So, Parikshit, thank you so much for doing this for our listeners. Welcome to Paisa Vaisa.
Thank you so much for having me, Anupam. Glad to be here, and hopefully we can have an engaging conversation that will benefit the listeners. Looking forward to it.
Looking forward to it. So let's start. Let's start with the use case, right? Because I think this last 1 year, probably during the pandemic, and now pandemic is still going on. One category of apps, one area of personal finance that has really boomed has been lending, digital lending, and apps or NBFCs or banks. I even had gold loans, the ability of them to give you a loan instantaneously or at least within a very short period of time on your mobile app. So very smooth procedure, very great UI, great UX. Just give us some context out here. Why has this happened? Why did the older way of giving loans, banks and BFCs, whatever it is, that was probably broken? Essentially, I'm asking you, Prashit, what is the use case for StashFin?
Perfect. Great question, Anupam. So, fundamentally, it's very important to understand that just from an economic standpoint, credit is fundamental, and I think the pandemic went out there and proved that, right? There can always be minor or major ebbs and flows in a person's cash flow. To for an economy such as India or any economy to grow for that matter, you always need people to be able to spend money, and spending in general is always going to be slightly above and beyond what your current means are, because people always act in the notion that the future is hopeful, right? That's how the world revolves on hope. So therefore, credit, I think is a very fundamental feature in any economy, growing ones especially. I believe what's happened in India over the large part of time is that the credit system is fundamentally broken, which is why you're seeing this kind of growth in alternative lending or digital lending, so to speak. Two problems there. Number one, that if you look at the bottom segment, bottom of the pyramid in India, which is a very large base, this is actually completely ignored by the banks. So if you are say a security guard, or if you're working at a cafe coffee day, just starting out your journey, and I'll at some point tell you a story about one of our customers who was actually a cafe coffee day employee and how the product benefited them. These guys, they cannot get a bank loan. One, they practically will not ever have time to go stand in line and meet with the manager at the bank. Second, if they were able to do that, the bank folks largely wouldn't entertain them, because they are flush with higher profile customers requesting credit. So for those reasons, this segment of population becomes completely ignored. On the other side, what happens is that the systems which are used to deliver credit are also not optimal. For instance, I'll give you an example of a colleague of ours who used to be a banker in the US. So he had an American Express card, which and now he's working with us, which is a startup. So his American Express card still assumes that he's a banker in the US. So therefore, there has been no change in his line of credit or his limit. However, since he's moved back to India and he doesn't have any sort of credit footprint in India, it's near impossible for him to go out there and get a credit card or a loan, because the Indian systems assume that he's new to credit. So there's a big dichotomy, right, in this sort of setup. So for those reasons, we believe that the system itself is a little bit flawed, and there is room for someone like ourselves or others in the digital lending industry to come in and fix some of these efficiencies and build a business out of it. And other than that, just the general issues around lack of transparency. I mean, a lot of us have taken loans, but I would really recommend someone go try and repay a loan back, like a home loan or a car loan. They make you jump through so many hoops. It feels it feels like you're asking for more money that you don't deserve. It's very hard. There's a lot of hidden fees that's thrown at you. So I think for all those reasons, that was primarily our use case, that we believe that there was a lot of inefficiencies in the lending ecosystem that we could deploy technology and a digital experience to solve.
Okay, Parikshit, one of the big things that I've noticed in this whole digital lending boom, so to say, was the role of technology. I wanted to talk about that because I get that what you said, the product itself, the loan product itself was, severely broken in a lot of places, primarily the customer experience, right? Getting a loan troublesome, repaying a loan, troublesome. Anything happens in the middle, you're probably lost. Tell me how technology has solved this, or is solving it, or do you think it has the potential to solve it?
Certainly. Technology. You have to think about the lending ecosystem in what's called its levers, right? So, one, there is wholesale borrowing, which results in lending. So, banks will, for example, borrow out of your savings account and lend to someone who wants a car loan. NBFCs such as ourselves will therefore borrow from banks, and so on and so forth. Right? The cycle kind of repeats itself. So that's the first lever: how much you borrow at versus what you lend at. The second lever is the operational expense. So, for instance, a bank in your neighborhood would probably be paying a lot of money in rent. And running a huge office, that's their operational expense, and all of that cost is essentially coming out of your pocket when you're taking a loan, because that's their source of revenue. And then final piece is delinquency, which is people who don't pay the loan back. So I think technology has a massive imprint on the lever number 2 and 3. And then, by effect, level number 1 as well, because if you're able to kind of maintain coherent systems, you can effectively reduce your cost of borrowing as well. So from an operational expense standpoint, I think just making the entire experience digital, reducing the need for people to use paper to file applications, that reduces the OpEx. For instance, we have a small office in Delhi, and we operate almost 700 cities out of our office here in Delhi,
Wow.
whereas a bank would likely have a branch in each one of those offices. So just if you just took the example of rent, that in itself puts us in a far more efficient stead, just in comparison to operational expense. There I think, and I also feel like with the current digital lending ecosystem, the OpEx optimization part of it is actually currently ignored. People are likely, spending a lot of time focusing on digital underwriting, on fraud protection, on optimizing for delinquency. There's a lot of room to optimize in the OpEx space as well. And then finally, as I mentioned earlier, delinquency, right? If you can do a lot using technology to understand a person's profile and give them the appropriate amount and the rate at which they can get credit, which also means that you'll end up rejecting some applications that don't meet the muster, which we can do far more efficiently using technology versus, say, a bank manager reviewing your application in person, on paper. Um,
Oh, okay, this is probably a good time for us to tell us something about StashFin, right? Because there are some apps which are just origination. They don't, they just do the technology part, the generation, the lead generation part, the origination part. They probably don't have an NBFC license, or they don't have a tie with the bank or an NBFC. Therefore, the interest rates that they offer to me as a customer are dictated by somebody else. How just tell us something about StashFin.
So, Anupam, StashFin, we originated in 2016. We've been in business for about 4 years at this point. Our product is a credit line card. So think about an overdraft facility from a bank, very similar to that. So let's say I offer you a 1 lakh rupee credit line. Now, with that, you get the ability to draw down any amount of that 1 lakh at any point in time that you want. So let's say you want 1,000 rupees, and you say, I'll repay this 1,000 rupees in 3 months. That's okay. You want 50,000 rupees and you want 12 months to repay it. That's also fine. And you take the entire 1 lakh and you want 24 months to repay it. That's also fine. So you're kind of being very granular in the amount of credit you want to consume. And again, unlike a bank loan, where the bank will typically give you 5 lakh rupees as a personal loan, where you may actually need only 3.5. So you're carrying the cost of the 1.5 extra, and paying for it while you may or may not need it. So that's the product.
So you are an NBFC as such, as a
Correct. So we are an NBFC as well, and we have a model where we lend out of our own book, as well as we partner with other NBFCs to provide our customers the best rate of interest for their current credit profile.
Okay, then you're the best person to answer this very hairy question, okay? Because this has come under a lot of controversy, lot of spotlight for all the wrong reasons. I guess when things like this happen, when you've got a rush of credit or money flowing in through the system, India is still not a very credit savvy country. I think there are about 10 crore credit cards, and those are just credit cards, by the way. The lending system is huge. It's also very diverse, from the money lender all the way to a sophisticated loan. In the middle of all this, in the last year with the pandemic and whatnot, you had the Chinese lending scam.
Yes.
Okay, what went wrong? I just, I want to talk about this in some kind of detail so that our listeners can actually be careful on whatever app they're downloading or whatever service they're doing, because there are some pretty ugly stories out there. Yeah. So
Yeah, yeah.
give me your perspective.
So Anupam, I mean, I'll look at it from a first principle standpoint first, and then get into the specifics of what actually happened with the apps and so on and so forth. I think what's gone wrong really is as Indians growing up, and I'm sure you'll agree, we were never taught about money. Like there is no financial education, even basic stuff like the effect of compounding. We just it was completely ignored, and for no fault of our parents, our education system just isn't geared to discuss that with kids. And I think the one learning that I have out of this, for example, I'm getting my daughter 8-year-old to read like Rich Dad Poor Dad, just basic stuff like that, right?
Yeah.
So because it's important, like it's important to, and this is really what broke down in my mind. So when the pandemic hit, everyone's looking for credit. So it's fairly easy to just launch an app on the app store, which is what a lot of these guys did, originate customers, and it's very hard for the regulator to go and police this. So largely, what was happening was that there's an app that you go out there, and now we're finding out that Google Play Store is not the primary Play Store for many people. There's 30, 40 alternate app stores where
What?
people, yeah,
I
where
had
people.
no idea.
Yeah, absolutely. So that's the belly of the beast. So while you're finding 300-400 apps on the Google Play Store, which Google is doing now a decent job of managing, they've delisted a bunch of apps and they've asked for NBFC certificates and so on and so forth. But that's only Google. So you buy some of these no-name brand phones. They are actually connected to some APK Adda, or there's like a million such app stores which look like a Google App Store, but there's no scrutiny on the back as to what's going on. So you were able to download an app, and it promised you a loan in a few minutes. Now, it, typically in India, you need to have a RBI registered NBFC to be able to make out a loan. But it's near impossible for the RBI. It's unfair for us to expect to expect the RBI to go out there and police the fact that someone is actually following the letter of the law or not. If you report it, they'll act on it, but near impossible for them to do it. So therefore, what happened is a bunch of these folks just launched apps on the Play Store and on these multiple Play Stores, which was essentially making out loans to people without having a lending license in the first place. Therefore, there was no control on rates. There was no control on the Fair Practices Code. They hadn't signed up to any of that. When it all was working fine, great. But as if you charge someone that kind of rate of interest where their dues are doubling every month, that is a spiraling debt trap that it's impossible to. Your wage growth at best is going to be 15 to 20% annually, right? So you're never going to be able to recover out of the debt trap.
And I heard that people committed suicide also. It was that bad.
Yeah, absolutely. I mean, we all read the news articles of some folks in Telangana, unfortunately, and taking their lives, and this was an aspect that they stated why they did so. Currently, as I understand, there's multiple authorities that are running this investigation. A lot of the apps have actually been removed from at least the Google Play Store, and the cyber folks are looking at these alternate Play stores as well. And it is also my understanding that some of the industry bodies are trying to come up with an approach on how to tackle this going forward.
Okay, great. And let's take a break right here on this episode with Parikshit Chitalkar, co-founder at StashFin. On the other side, we're going to talk about StashFin, the app, whatever what all it does, the features that it has, how it's different from other apps that also are into digital lending. And of course, we get into a very important aspect, which is defaults and repayment. Don't go anywhere. We'll be right back with Paisa Vaisa. And welcome back to this episode of Paisa Vaisa. My guest, Parikshit Chitalkar, co-founder at StashFin. In the first part of this episode, we spoke a lot about digital lending, the use case for a nimble and agile app that StashFin is, and of course, what also went wrong in the Chinese lending scam apps. On this part of the episode, we're going to talk exclusively, mainly about the StashFin app. So, Parikshit, let's start from there. Let's talk about the products that StashFin offers. You spoke about a credit line, which actually it operates much better than your traditional overdraft. Let's just go back, revisit the concept of the credit line or the credit card that you're talking about. Let's start from there.
Great. So, Anupam, what we offer to our customers is called a credit line card. So it's a Visa card. So we're directly integrated on the Visa and the Mastercard switch both. So this is a card that we put in our customer's wallet. It is backed by a virtual line of credit. A line of credit is akin to an overdraft facility that you'd get from your bank. So for instance, if you had like a 1 lakh rupee line, you have the ability to withdraw any part of that line at any time of the day, 24/7. Typically, the funds are on your card within 5 to 10 seconds. And once the funds are loaded onto your card, it's a standard Visa card, both virtual and physical. So you can go out there to your nearest ATM, withdraw all the cash free of cost. We don't have any cash withdrawal charges. You can go to the nearest petrol pump and fuel your vehicle. You can buy something on Amazon or load your favorite wallet. So it's a fully open loop card that we provide our customers, which is available 24/7, accessible through our app. So yeah, that's largely how the product works.
What else do you have? Is this the main product?
Yeah, so this is our primary product. Now we service this product in typically Cat A, Cat B cities. We're in 17 cities at the moment. Now, if there is a customer that is not from one of these cities that we service, we offer the same product on a virtual card basis. This is we call it StashFin Elevate. It's a very small ticket size product. It's between 1,000 to 10,000 rupees. And as you take that product, you repay that back over time. As we see significant footprint in that particular city, we'll open that city up to the main card and offer a larger line to our customers.
Let's take one step back, and I'm going to go back to the anecdote that you said in the first half, right? You spoke about a security guard, you spoke about a CCD employee. Tell us the average profile of the people that you're targeting, so to say, and more importantly, how do I sign up, right? Does it require me to have a PAN card, a credit score? What do I need to give to you to get the process started?
Yeah, so Anupam, great question again. I think we started by trying to solve the problem of this entire thin file or no file base in India, where the demand for credit is very high, and fortunately we've seen that the delinquency performance is also fairly good, which I'll talk about in a minute. So therefore, for you to sign up, all you need to do is download the app. Click a selfie, give us your phone number, do an OTP check, just very, very basic information, and post this within 90 seconds. We'll actually give you a decision on whether we can offer you credit, and if yes, how much. Because in our experience, that's really what customers are looking for. They need to know instantly, or as close to instantly as possible, will I get a loan? And if yes, how long or how much will the amount be? So we solved that problem. We specialize, our model specialize in being able to lend to people who are new to credit, who may or may not have a bureau profile at all, or may have a very, very thin bureau profile. So we do lend to those. In fact, 80% of our customer base started with us as new to credit, and they've now evolved. And as an example, as I was mentioning earlier, way back in 2016, we had a customer. This person was from a place called Bilaspur, very, very small town. He had fortunately, through his hard work and perseverance, been able to he graduated from Bilaspur and been able to secure a spot in an MBA school in Mumbai. So when he moved to Bombay, obviously coming from a small town, being able to manage expenses, he applied to our platform. At that time, we were doing a lot of manual reviews. We just started out. Our technology stack wasn't fully built out as it is now. Now we have the ability to automate a lot of these flows. But we realized that this is the profile of the customer, no credit score. We gave him a very small line, I think a 25,000 rupee line or something like that. And we put that was his first card. So the boy was very happy that he actually had a card. Like,
Wow.
he was able to go to a mall or whatnot. So pretty aspirational from that standpoint. So that worked out well. Now the customer has been with us at this point of time for about 4 years. Fortunately for him, he's now working at a big four consulting company. He's
Wow.
pursued his MBA, closed that. Even more fortunate, he's added an extra zero to his salary.
Good to know that. Yeah.
Yeah, and we're still the primary use card for him, because what we've been
Nice.
able to do because of our structure, as I was describing earlier, Anupam, is that since we are an NBFC of our own, we can take this initial risk which other lenders will not. And as the person grows in their credit profile, now this person may likely be a fairly high bureau score, working with a Cat A company, making a good salary. We are able to source funds from the least cost lender on the back to actually provide a better rate. Now, what this does for the person is it takes away the discovery process, because every time, first of all, you don't know that you moved up in the credit profile, right? If by some stroke of luck you are able to find that out, now you need to figure out okay, who's going to lend to me at this credit profile and what the rate will be. If you're able to do both those things, then it's the entire process of repaying this loan back, paying
Yeah.
some exorbitant foreclosure fee, applying again, and doing the whole process again. This person will be at a point in time where he's likely looking to buy a car, or do something like move on up in life. So therefore the product that we offer, it tries to service the customer throughout their entire credit life cycle, which is where we feel we have a bit of a unique edge.
Very interesting. It's good to talk to a startup funder who knows what thin file or no file is, right?
Yeah.
Because otherwise, I have people that I just, the conversation just goes into to technology, which of course, that's great. Okay. Let's just go into the smaller nuances, the small, terms and conditions as it is called. So, what are the interest rates that I'm looking at? What are the processing fees that I'm looking at? What are the costs that I'm looking at when I'm signing up with you? Just walk us through that.
So Anupam, we try and build a very honest lending platform. The rates move with risk. So if it's a new to credit, thin file customer, the rates obviously will be a little bit higher than normal. But it's your alternative at that point will be a very very high interest rate credit card, which is laden with a ton of fees. Cash withdrawal charges, this, that, and the other. We remove all that. Our rates are typically less than half of what a credit card would charge. And then as your credit profile improves, those rates consistently end up dropping over time. So our best customers will borrow at, say, anywhere between 1 to 1.5% a month and up. And then the outer end would be about a half of a credit card charge. So we try and make the product very competitive from a pricing standpoint, but at the same time we make sure that you're not burdened with any fees. There's no hidden charges. If you pay everything on time, it's completely transparent, and there's never a surprise. In fact, we were likely when the moratorium was announced, we were one of the first lenders in the market. In fact, I believe 3 days after the moratorium, we had launched a permanent feature on the app called Emi Snooze. So moratorium is a one-time thing, but you may be in a situation at some point in life where for this month you can't pay your payment. So we actually added that as a feature. You can go onto the app, request for a snooze 5 days before your monthly payment, and just pay it the following month. So we do things like that just to make sure that it's consumer friendly, because what we've seen in this segment is that if you can prevent ID theft, which is very very large, and that is a big risk that lenders, that's the other side of the whole Chinese app scam, is that scams also went up on the borrower side, where we were seeing amazing amounts of fraud come through, and very very sophisticated types of fraud.
Rewind. Hold that thought. Tell me more about this. Sounds damn interesting. I've not heard of this.
Yeah, so we interesting. I mean, we actually have a fairly large machine learning and AI practice, largely targeted towards fraud detection. Because what we have seen in our portfolio is that if you are able to effectively weed out ID theft, then the risk of delinquency is actually fairly low. These customers, they see decent wage growth. Their skills are very replaceable, right? So it's unlikely for them to be out of a job for a long time. So what's gonna you may get payments 180 days late, but you'll get the payment if you're able to identify that the customer is indeed the person who they are claiming to be. What we have seen in the recent, say 6 to 9 months, and it's actually picked up quite a bit in the last 2 to 3 months, is the complexity and the skill that these fraudsters are now deploying to actually defraud the system and carry out ID theft. So earlier there was very very basic stuff like I take your picture, paste it on my or I take my picture, paste it on your Aadhaar card, and say that I'm Anupam and try and get a loan. Works fairly
Wow.
well in the manual world. Works for the large part in the digital world as well, where all you're doing is originating the loan and passing it on to somebody. So you may not be doing checks, or it's not a very necessary check because you're assuming that the lender on the back is verifying this. Now we have at a point where we are using computer vision models very akin to what maybe a Tesla or a Google would be doing. They have open sourced these. We are deploying these, and even with those models, we are catching 15 to 20 cases a day, every single day, of very very advanced what's called adversarial attacks. So an
What
adversarial,
what
yeah.
is this, man? I'm just head explode moment because I thought we're talking about Jamtara level scams of them calling you, taking your OTP, stuff like that. But this
No,
sounds
no,
sophisticated.
no. It's very, very sophisticated. I mean, it is
Wow.
really a testament to how intelligent we as Indians are. And, if we can channelize, if Mr. Modi can find a way of channelizing this energy in the right direction,
Are you
we will.
serious? Wow,
Yeah,
I
yeah.
didn't know this, man. Okay, go on. Sorry.
Yeah, we're actually seeing adversarial attacks. Adversarial attacks are probably the cutting edge of machine learning. Where what you do is you basically try and confuse a machine learning model to understand the image of it being something else. So. And typically what happens is machine learning models are classification models, so they'll always respond with a yes or no, and even if it doesn't find something, it'll respond with a yes, which will make the case go through. So we recently saw 70 applications come in a span of about 30 minutes from Assam, which were all an adversarial attack. So this guy was basically wearing a jacket, and the jacket had a picture of a boxing glove on his left chest.
Huh.
So what the ML model thought was there's two faces in one image. Right, so that's an adversarial attack. So a typical ML model will say, well, I don't know what to do, so I'm not going to touch this, move on, right? Fortunately for us, we'd put a manual check in place that if it gets confused, throw it to a human underwriter and see what happens. And that's how we were able to pick it up. But in 30 minutes, there were 70 cases. It could have,
Eh.
2-3 lakhs would have just been disbursed in a matter of minutes, and that money would never come back. So we think that if you're able to manage this, then largely delinquencies can also be managed fairly effectively. Therefore, we can manage to keep our rates very competitive.
It's crazy. I'd heard of DDoS and stuff. I don't know what's an adversarial attack, but okay, maybe I can get you back sometime and we can talk in detail about this stuff. It sounds really interesting.
Yeah, it is. It is.
But from delinquency, let's just go one level deeper in that, and stuff which is more common, stuff which is more easily understood, stuff that's outside of the tech world. How do you guys handle defaults? Because some pretty sad stories out there. We've heard of apps that take over your contact book, and if you default, they'll blast SMSs to your friends, family, naming, shipping. Some sad shit. I mean, how do you
Yeah.
guys deal with that?
So the RBI has done a pretty decent job. They've actually listed out what's called a fair practices of lending code, which you have to sign up for, and you have to refresh your signups, and you have to make sure that your teams are trained, and so on and so forth. It lays out very, very clearly what you can and what you can't do. And like I said, it's down to you can't call somebody after X PM, or certainly not call relatives, and so on and so forth. So we make sure that our teams are all aligned, make sure our teams are all trained on these. And at the end of the day, we are a RBI regulated NBFC. We have to kind of make sure that we stick to these things because our lending license is that's sacrosanct to us. We need to make sure we protect that. But like I said, if you're able to weed out the risk of ID theft, and you're able to make sure that the customer is who they say they are, you really don't have to get into situations where these are the only means left for recovery. I mean, because like I said, skill sets are replaceable. Nominal wage growth is always available. So you may get delays, but to get defaults out of a salaried segment, especially, which is where we operate, it can be managed. It's not the end of the world. So we focus on that. We focus on making sure that the customers are contactable, making sure that the fees that we charge are fair, so they don't feel like they're paying some ridiculous amounts because of which they'll try and avoid your phone calls. So you do all those basic things. You keep the communication levels up. I don't believe there's a need for aggressive collection tactics at all.
Interesting. Okay, we're kind of just wrapping things up out here. One thing that I always ask my guests is that tell us how our listeners should choose a good, product that you're offering. Say if people are out in the market looking for a digital loan, and I ask you, Parikshit, tell me the 2-3 things that you would tell your listeners to look forward in the app that they're using. Because right now, all I see is you've got a smooth and sexy interface, and that's it, you're sorted. I mean, if that's all there is, then anybody can, do that.
Yeah.
But according to you, what should be the, whatever, 1, 2, 3, 4, 5 things that our listeners should put on their checklist? And only if every app ticks all those boxes, go in for that.
Absolutely. So I think I'll go back to saying the fact that first of all, if you are in the market for getting a loan or something of that nature, please be clear about the fact that you were not taught how to do this. So therefore, spend the time in educating yourself. It's not your fault, not your parents' fault. As a system, we've never done it. So please spend the time to educate yourself. So that means that are the terms and conditions upfront very clear? Are they available on some website? It sounds cliched. People don't need the read the fine print, but when you're dealing with money, please do. That's one. Second, make sure that it is there's a very tight connection, at least, where you are being able to identify who the lender on the back end is, because ultimately that lender is going to be the one who will try and come and collect for the money, right? So you need to be aware of who that person is and what your terms and conditions with that lender are. That's very, very important. And then finally comes the whole aspect around features, how soon will I get the money, so on and so forth. Those are all, as you said, those are actually fairly clearly highlighted in the UI UX. But what I see is, I think number one, number two should be that make sure that the transparency is 100%. You're very, very familiar as to what you're getting into, and the identity of the lender on the back end.
Fantastic.
This is where I see a lot of people lose their way.
Tell me about how to identify the lender, right? Because not everybody is probably upfront. Sometimes it's hidden in about us, sometimes it's hidden somewhere else. Sometimes there are people who are very upfront and just down itself they write like we are proud of being so and so and stuff, but not everybody's like that.
Yeah.
Where do we find this?
No, so the ones that are very transparent about it will publish it on their website, or they will basically go out there and say, so let's say if it's an origination app, they'll go out there and they'll list 4 or 5 different NBFCs or banks that they work with. If you're finding an NBFC name, it's actually fairly easy. Go to the RBI website and check out if that's a legal NBFC or not, and that NBFC will clearly state if they're partnering. So do the back check as well. Does the NBFC agree that they're partnering with this app that is claiming to be selling loans on their behalf? Because sometimes that also happens, that the NBFC doesn't even know that someone's originating loans for them.
Fantastic.
Yeah.
How do we reach out to you? I mean, the app is there on the Apple iOS store. It's on iTunes or whatever it's called. And then you have it on the Google Play Store.
Correct.
You have a website at StashFin.com.
StashFin.com, yes.
Yeah, and you're there on all social media, I guess.
We are, yes.
So that's the way that our listeners should reach out to you, right?
Absolutely, yeah. Absolutely.
So there you go, folks. The app is called StashFin, StashFin. There on both the stores. I don't know about the shady stores, whether it's there also or not. I hope it's not there.
We try to make sure it's not, but these guys will just, yeah.
Yeah, but you should go out on the website and check it out, what their logo looks like and stuff. I'm sure that they're there on social media and you can reach out to them directly. But that's a wrap on this episode of Paisa Vaisa. My guest, Parikshit Chitalkar, co-founder at StashFin. Parikshit, thank you for doing this, and I'll tell you why. I like the fact that you took all these hairy, slightly gray areas upfront and spoke about them, because it's really important for our listeners. Like you said, credit is not new to us. I'm sorry, credit is new to us. I mean, we're still getting used to it. And I feel that in a lot of getting carried away with the smoothness of a loan, okay, which I know is supposedly the in thing now, you kind of miss out on the what's called MITC, okay, the most important terms and conditions. Terms and conditions. So thank you, really thank you for doing that. I hope that we can have you back sometime.
Yeah, absolutely. We'll look forward to it. Thank you so much, Anupam. Great talking to you.
Sure. Thank you so much. Thanks. And listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram if you want to reach out to me. I'm your host, Anupam Gupta, B50 on Twitter. And thank you so much, guys, for listening to Paisa Vaisa.